Hi everybody, I'm Diane Brady. I'm here with Jenny Johnson, who is of course the CEO and President. Frank and Templeton, we are at the Milken Institute Global Conference. So let's start. First of all, welcome Jenny.
Thank you.
I wish you'd brought your dog who's been coming around with you. He's like the most beautiful bulldog. But let's start at the 30,000. Let's start with the global economy. You know, how are you looking at it right now?
So, I think you have to look, well, first of all, I guess you have to look at it with a couple of big events that are going on, right? So as I travel around the world, these three macro themes are very significant. One is U.S. raising rates. The high inflation is essentially being exported to a lot of other economies, which creates a certain amount of stress. Number two, Russia-Ukraine war and no clear end in sight, which has implications on both energy, the price of energy, food, and honestly, sort of people taking sides a little bit, right? So that and U.S.-China relations would be the third. And so you see this element of almost a little bit of a divide, right? And people are choosing to either be aligned U.S., aligned more, leaning more China, more U.S., or choosing the neutral zone, right? And
that seems hard to choose the neutral zone in that scenario, is it?
I think you look at it, and you have to look at countries will act in their self-interest, right?
Yeah.
And so, a country like India is got to stay friendly with both China and the U.S. Folks in the Middle East are choosing to stay very neutral. There's a role on that where if you don't have to be, if it's not your fight, you choose whether it really makes sense to be in it, right? And so I think that backdrop where you have to look at everything kind of through that lens. I think with the U.S. raising rates, I think the good news is we're close to the end of that. The consumer is still strong, which has allowed us to raise rates fairly quickly, right, without driving the economy right into a recession. So you still see some inflation there, which I think has been hard for the Fed. I tend to think we'll go up 25 basis points more, and then the Fed will let it sit and see
and they'll sit and
what
breathe.
happens. Right?
Well, I'd be remiss, and you talk about interest rates rising quickly. One of the consequences, of course, we've seen in the regional banking system.
Sure.
That's been a lot to absorb, and are you concerned about that? How does that play out?
So I think the good news is it's fairly self-contained at the point. I think we're going to have to be honest with ourselves to diagnose what ultimately happened. But I think that the willingness of the regulators to step in and the Fed to step in and immediately backstop deposits was really important because, unlike the global financial crisis where people were lending and arguably irresponsible, this was a bank that invested in U.S. government securities and the rate
and people
increase.
were putting their money in the bank in good faith.
And it's really important that you have confidence in that space. So protecting that kept the damage kind of within those regional banks. So that's the good news. The question is, what do we do from here? And I do think that regional banks play a very important role in our economy. They're sort of the old banking system where you look somebody in the eye and you decide to give them a loan. That's really important.
Please, Jenny, give me that loan. It's like, I knew your dad.
Exactly.
No way. No, it's just But that is an interesting dilemma because they were not the ones considered too big to fail, so to speak. So does that void, when you look at it, does it have ripple effects even in terms of, I don't want to bring everything back to investing, but just from a business perspective, what are the consequences that you should be looking at? Well,
so again, let's just unpack that for a second versus where the regulators had to step in to protect banks in the global financial crisis. There could have been real losses.
Right.
Here, the securities that were backstopping those deposits were U.S. government bonds, right? So, yes, they had traded at a discount because interest rates had gone up, but the U.S. government was going to pay back, and therefore anybody, investor over time, would get a payback. Again, very, very different. I do worry a little bit about what do we do if we overlay a bunch more costs on banks to protect depositors with extending the insurance, and maybe 250 is not the right level. It's some amount.
Another layer of policies, like how we throw in like a Dodd-Frank, and every time this happens, here's another bill.
And so let's think about so one is you'll make those checking accounts even less competitive to, say, a money market fund, which is paying 4.5 to 4.75%, right?
Yeah.
That becomes a problem for banks as people can move their money out. And then, honestly, you look at the global financial crisis, a lot of the regulation that was very appropriately intended to protect the bank depositors ended up making it such that banks don't like to lend anymore, right? And so banks are keeping their capital just for their best clients, which means you've created this huge private credit market, which is outside the purview of regulation. Now, so far, that's been a really important tool, and I think we're going to see more.
So when we say there's no shadow banking anymore, it's like, well, welcome to your new cousin to shadow banking, private credit.
I believe that like syndicated loans and private credit are about 50-50 equal to market, and you're probably going to see even less syndicated loans because one of the policy changes in 08 was that banks had to keep a percentage of equity of those loans on their balance sheet, so they're expensive capital.
Is that market innovation, Jenny, like private credit, or is it cause for concern? Because
I think it's very important. It is a very important tool for mid-market businesses, and it's mostly institutional capital and some retail capital, right? That's investing in these. So but I think it's very important to our economy.
You seem somewhat, my pure anecdotal, non-scientific, there's a lot more optimism here than I would have anticipated given some of the headwinds. Would you put yourself in that camp? Or
Yeah, because I think that the consumer is still pretty resilient. I mean, that's why inflation's been so tough. It's been easy for the Fed to go from a 9% inflation to 5 to 2, their stated goal is going to be much tougher.
Yeah.
Part of that's because the consumer is still happily spending.
Yeah. So talk about blockchains. I think of you as our expert because but you've been a pioneer and innovator, certainly in bringing blockchain into your company, and there's so much linked with crypto where people are now down on blockchain. How are you seeing it? What's your message on that?
So I think that, think about the .com blow up. All the naysayers on .com.
It's a good time. It's a good old time.
Yeah. But they looked at it and they said, "I told you so," right? But the reality is, the next generation of amazing companies came out of there. So let's think about what blockchain does. It does kind of three things, right? It has a payment mechanism. It has a general ledger, which means I know if I trade on it, then you know that I'm the person there. So I can validate it, right? And it has a smart contract mechanism. You can program in. So I think a really cool way to highlight what the future can be from an interesting investment capabilities, let alone making back offices of financial services much more efficient, is that Rihanna, right before the Super Bowl, came out, issued 300 NFTs, each one worth something like 0.0033% royalty on one of her big hits, right? How can she do that? Well, she can do it because when she issues it, the smart contract can sit there, say, in a Spotify, and when the song is played, that teeny little fractional of your royalty.
We know her career's not over, so we trust that with Rihanna. So.
Yeah, and therefore you're going to get paid on that. So if I'm a fan, how cool if I now every time I play a song, I know I'm getting paid for it.
I like your analogy to Web, I guess 1.0. What did we learn from this most recent chapter that you think lays the foundation for better, stronger, faster?
Yeah. So remember with the blow-ups in blockchain, they tended to happen on private chains, right? We're big fans of public chains. Franklin Templeton has a tokenized money market fund, and the Benji. You can download the Benji app, and that's built on Stellar, which is a public blockchain, which means the transactions will show up on the chain.
So the transparency factor.
Your information is kept privately, right?
Okay.
Had the FTX transactions happened on a public exchange, it's likely people would have started to say something's remiss here. But because it was on private, you couldn't see that. And I think over time, the regulators will get more comfortable with the public chains because they'll realize they can leverage AI and they'll actually have more insights to what's happening on the chain. So, and then the other example, which I think is really important, is if you're building a private blockchain, all that expense is yours. If you're using a public blockchain,
private cloud used to be.
Exactly. So it's expensive, but so imagine when Ethereum wanted to move from proof of stake or proof of work to proof of the stake, right? There was no project manager. There was a group of people essentially volunteering, getting paid in Ether coming up, architecting and building a very, very complicated project, and they merge, and it happened overnight without a glitch. And every business built on the Ethereum chain got the benefit of that advancement without ever spending a dime. So it's going to be harder for the private chains to ultimately compete with the public chains.
So let me ask, end by saying, what's on your radar that, let's say, a twinkle in your eye, but in terms of using the next wave of technology to transform your business? Where do you see some of the greatest opportunities, either within Franklin Templeton or more generally in the industry? And I would, let's take blockchain, but also we've got generative AI. What are some of the potential use cases that excite you around that?
So, I think there's a lot of technologies that are important, right? And a lot of them that feed together.
Yeah.
That generative AI is only here because of a lot of underlying cloud computing, a lot of underlying technology things. But I can tell you the two that I am focused on that I think will be transformative, and if we don't embrace them and figure it out, is both blockchain as well as AI.
Yeah.
And I think that any active managers are going to have to figure out ways to leverage insights from AI and add that to their investment thesis.
And every country, you've got countries like Italy that have tried to stop. Woe befall any country that thinks they can stop the tide of history, I suppose.
Well, and like ChatGPT, one of the challenges is as soon as you use it, your data's sort of out there, so you're going to have to build sort of private, ring fence some of that, and I think that'll happen for companies. Look, my view on technology is, water runs down a mountain no matter how much you block it, so, it's going to go around it.
Yeah.
I think you're better off trying to embrace it and figure out how it can enhance your business as opposed to trying to stop it, because I think it's going to be tough to stop.
Very good advice. I can't think of a better place to end than there. Thanks for joining us.
Thank you. Thanks for having me.